So, welcome to the first episode of our category skill building. As you already know from the first video, here we're gonna do 10 videos, each 10 minutes, so we don't have a lot of time here, to explain you the basis all the way to, the small things and, little secrets you need to know to understand trading, to understand one strategy, and to understand the whole concept of what we are doing here. So I'm doing a timer right now, and we have 10 minutes to discuss general and candles to start all of this. And to to introduce you into trading basically. So let's start right into it. What is TradingView? TradingView is this software as you see it right here. All traders use TradingView basically. It's a tool to analyze. Yes, you can connect it to a broker and trade on here, but normally this tool is to analyze. You can put the indices like ES and Nasdaq like we trade, but you can also see crypto, you can also see the Apple stock, you can see gold, you can see silver, you can see the price action of everything. Because trading is not only the skill of predicting where crypto wants to go or where the indices wants to go, but it's the prediction of everything. If you have the skill of trading, you can predict what's going to happen in everything. You can predict how the price will increase in a coffee stock. You can predict everything, and this is trading. And for analyzing, to do your prediction, you need to do analyzing. And for analyzing, you can see it on TradingView because TradingView has basically all charts. How you can search charts just here on the top, and you can search whatever you want. You can search for gold, and you have the gold chart. You can search for Apple, and you have the Apple stock. You can search for everything and analyze here. You can also change the interface of TradingView with a right click and go to settings. If you want to copy my settings, here on symbols, this is my settings. On canvas, this is my settings. Um, and the rest is basically not relevant. But if you want, take a screenshot or pause the video and copy it. So this is all about TradingView, first of all. For TradingView, one more thing, you don't need really to pay for it. There's a free version for it. It's better to have, I think, the first paid version, but if you're starting out and you just want to see how TradingView works, want to analyze the basics, then you don't really need to know it. And you don't really need to buy anything. So let's go into types of trading now. A little picture which may make it easier for you. Um, let's look at this. So there's scalp trading, there's day trading, there's swing trading, and there's position trading, or also named investing. So investing is on a big time frame. Yeah, like in crypto, for example, we have 4 year cycles, and we invest and we wait. Maybe we buy when the fear and greed index, for example, is in extreme fear, and we sell when there's a big extension to the upside. But this is all about investing. You can invest in anything. You can invest in the indexes, into stocks and crypto, but investing is a long time frame. And since it's a long time frame and you have a lot of time, it's pretty easy and it's pretty low risk. Then there's swing trading. You can swing trade crypto. You can again swing trade everything. Swing trading is a little bit lower time frame. Yeah, here we focus on the daily time frame, on the 4 hour time frame, maybe on the 1 hour time frame. And so the risk is a little bit higher than on investing, because you have a clear stop loss, which is a lot tighter than on investing, for example. Um, but yeah, it's a little bit faster. It's medium profit, but medium speed. Um, let's go to day trading. Day trading is what we discuss here, and day trading focuses on the 50-minute time frame, on the 1 hour time frame, on the 5 minute time frame, and also execution on the 1 minute or 2 minute time frame. So here you have the possibility to profit from the smallest movements in any market basically, because you don't need to predict big moves. You just have a tight stop loss and the ratio between your risk, your stop loss, and your take profit is what in the end shows you the profit you have. It's not about the market has to move 10% like in investing, but in day trading, the market can move 0.2% and you can make a huge profit. This is even more interesting in scalp trading. Here we execute on the 1 minute or like maximum on the 5 minute. It's way faster than day trading. On day trading, we normally have positions running 5 minutes to 1 hour. In scalp trading, you are normally out within 5 minutes maximum, 10 minutes maybe, and even shorter, maybe also seconds. But the bigger the time frame, the easier trading is, and the smaller the time frame, the harder it will be. So now we are already at 5 minutes, so we need to hurry up a little bit. This is an overview for strategies. There's a lot of strategies out there. There's Fibonacci, there's candlesticks, patterns, there's momentum, there's breakouts. There's a lot of things. You can make a screenshot of this if you want to. But we will focus here on smart money concept, on ICT. What this means and what the building blocks are and how you can use it and why it works, we discuss in the next videos, and you will understand in the next videos. But there's like a little overview. There's a lot of strategies you can use. Most strategies work if you have most experience in them, but there's also a lot of bullshit going on. So we focus on SMC, smart money concept. So why we teach SMC? We teach SMC, just a short overview, because it makes sense. If you have a chart and the chart does this, and some people say, well, we have a triangle and the chart like bounces his head on the imaginary walls and then comes out, well, it doesn't really make sense. But on SMC, for example, if we have a high and we sweep this high and we go lower, it makes sense that we turn here. Maybe you don't really understand now why it makes sense, but you will understand in the next videos. um, it's market understanding. It's trading with the smart monies, trading together with the institutions, and not trading based on an imaginary wall you just draw on the charts. So that's kind of important to know, but you will understand in depth what this means. So let's go over time frames now. Time frames, we have the 1 minute time frame, 2, 3, we have every time frame you want. Up to 1 year time frame. So on the different time frames you can see the same price action, just in a smaller or bigger view. So the daily candle, for example, can look something like this. But if we let TradingView show us this 1 hour, this one daily candle in 1 hour candles, there can be 24 candles doing like this, because we moved all of this way. There can be this price movement happening in this range, or we can have the 1 hour the one daily candle, and this movement can happen. So we do not know which type of movement happened in this day if we don't look at the lower time frames. So we can use different time frames to see more exactly what price did and what price wants to do. So it's really good for us to analyze and to really see in depth what happens and where the bulls are showing up and where the bears are showing up. So now we go into sessions. There's different trading sessions, different times in the day where different money is flowing into the market. There's three main sessions, basically. There's Asia session, there's London session, and there's New York session, which basically means that in Asia session, it's for Europe time zone, it's at night. It's when Asia is awake, when Asia is trading, when Asia's banks and institutes are active. They are not active during the night. So when there is day for them, they are active. There's money flowing into the market. So in London session, for example, money flows into the market when Europe people are awake when they are working. Same is in New York. So that's why they are named New York session, London session, and Asia session. And that's why there's liquidity, or that's why there is volume flowing into the market at beginning of those sessions, because they start to work. So let's go to candles and lines. Candles, as I showed you before, you definitely know how they look. We can also let the chart show in lines. So here we can see candles. Okay, well, but here we can see everything in a line chart. So why we use candles? As I told you before, we use candles because we can see more exactly what happened here. I can show you this picture. You can make a screenshot of it. Because the candle shows us where this price opened. For example, if this is a 1 hour candle, then the market opened at the beginning of the hour right here, closed right here, so end of the hour, but into this hour, inside of this 1 hour, the price was here and was here. Same for the bearish candle. On the line chart, we don't see this. On the line chart, we just see a straight line to upwards. We don't know what happened in this 1 hour. So there can be a line chart which shows us this. But the candles in this 1 hour can be like this movement. So we need to know, and we can profit on this movement a lot more, because we can long, we can short, we can long, we can short, we can long, we can short. And on the line chart it's like this, and we don't know what happened. So candles are way more exact. The chart and the candles, they tell us a story. The line chart doesn't. The line chart is just for investment. Okay, it tells a story because it's so large time frame. But on the minute chart, on the 5 minute chart, it's just a line and we cannot see anything. Because if, for example, we have a candle looking like this, which is a bullish candle, for example, and the candle looks like this with a huge wick to the upside, then okay, the candle opened here, it closed here, but at some point it was all the way up here. So this is important to know. And now if we scale lower into a lower time frame, for example, this is a 1 hour candle, then in this 1 hour there could be this movement, there could be this movement, and we cannot know without scaling and using lower time frames. So candles are way more exact and they tell a story, and we can interpret this story and analyze even better and go deeper, and so take better conclusion of what will happen next, probably. So let's jump to how a candle is built. We already discussed this. You can make a screenshot of the picture I showed you. So yeah, you can look at it in all time you have, and yeah, just remember it. So this should be it. A fast, quick mind dump to everything what you need to know in general and about candles. I will put all the pictures here again, so you can take a screenshot of the candles. Okay, now I put the strategies right here, so you can take a screenshot of this too. And lastly, about the different types of trading, about investing, about swing trading, day trading, and scalping. So this should be it for this video. Pretty quick video, pretty fast mind dump. If it's too fast for you, just watch it 2 or 3 times. This skill building is not there to do a really long course for you. It's just a little overview, fast, quick, and everything which is important. So see you in the next episode.